Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Thursday. Market's going pretty crazy. I take it that ADP number must have been really good. Let's come over here to financial Jews. Oh my gosh. Oh my god. I thought I was gonna look at this and like, yeah, it's probably gonna be a pretty good number. 497 versus 225. Whoa. The number was twice the expectation. What? WTF? What is going on in this market, man? These numbers, like as much as we continue to like outperform the estimates, and you compensate for that, and you're like, okay, well, we got something wrong, and then it still beats that by double. Like, what? WTF? What the heck? Okay, so that pretty much like just dominates any kind of analysis we might do here in the charts, right? Treasury's down. I should note that after we left yesterday, the interest rates increased another like 5 to 8 basis points, right? And now we're really getting creamed. So rates are, in fact, they are. The 10-year is to 4%. Just as we had kind of predicted a month ago. You know, I really probably should have just swung it. Oh, well. ES getting creamed here, but they were down overnight too. Oil, fairly okay. Gold and silver, of course, getting creamed here. Actually, you know what? Silver is not as bad as I thought it would be. Copper's down slightly on the day. And what about the dollar? How did this affect the dollar? Well, the dollar is marginally higher today, 102.8. Kind of before the news. The news apparently hurt the dollar initially and is now bouncing. And Bitcoin having a little bit of a spike this morning before getting chopped down on this news. We should probably do a little bit of investigation to see perhaps why Bitcoin was hopping there. So that's where we're at. I'm going to blow my nose here. We do have the U.S. initial jobless claims in about 3 minutes. Oh my gosh. I'm so stupid. Okay, here's the thing, is that this new microphone does not have like a switch to turn it on and off, so I'm turning it off in software and then I forget about it. Yeah. Okay, so let me restart here. ADP. My gosh. Oh. US ADP employment change was 497 versus 225. Double the forecast, basically. And I don't know what you do with this market. Well, okay, the micros went up quite a bit further there. This sucks when like you know that it's gonna go higher, but like where is a safe place to get in? You know? These rates, I mean, like we're already at 402. Okay, volumes may be backing off there a little bit. US initial jobless claims was 248 versus 245, so slightly above expectation, but not by much. Okay, so before we had gotten into that, I'm not going to go back through the charts because there's not really much to say. It's all just reacting to this ADP. This puts us, well, not us, but me in a tough spot because I want to be positioned for higher rates. You know, I really should have just like last week gone long and just stayed long, you know, but along the micros. Now that we've already moved so much, you know, it's kind of hard to say like, well, is it going to go higher? I think that rates probably could go higher today. But the question is just like, where's the safe spot to get in? No, we lost 3,000 more jobs than expected. So normally that would be dovish, but it's so close to expected that they're basically saying it came in line, and the market doesn't like that. The market doesn't like that it came in line, basically, is my take on that one. But that's all within the context of ADP being really positive. Basically, the market is saying that the jobs number tomorrow is probably going to be good. That's what's going on here. This is all about non-farms. They're saying, well, non-farms is probably going to surprise again. And then that's going to turn into, oh, the Federal Reserve is behind and is going to have to catch up again. Right? Like, now the market is not pricing in any kind of rate decreases at all. And I'm starting to think, just off of those numbers, I'm back to maybe we need to do 50 basis point hikes again. Yeah. I've seen a lot of people that have been like, oh, you know, when the first half of the year is really good and all of this stuff, I'm really concerned about the second half of the year because the second half of the year is not turning out like what the scenarios at the beginning of the year were at all, right? The second half of the year is now turning into, it was supposed to be a recession, and instead we're getting unusual, unexpected strength. Then, yeah, the Federal Reserve is going to squeeze these markets, and it's going to be just like 2022 again. There's a lot of problems with man, when you have low interest rates, it's like it's generally good for everybody, but then there's kind of like this systemic problems that you've done it for like 10, 15 years, kind of starts to create some problems, right? But when you have high interest rates, it starts to create problems awfully quickly. One of the problems that I see is that home builders don't do very well with higher interest rates, right? So this problem that we have that there's not enough, cost of living is too high, housing is too high, and then you're squeezing the home builders so that they can't build houses, right? Let's just start there. Well, let's come in here. I do see a big bid there at 18. Yeah, WTF. The zero hedge title is WTF ADP reports massive surge in employment. The U.S. economy added a stunning 497,000 jobs in June, according to ADP's employment report. That's more than double the 225K expectation. That is the biggest monthly jump since February of 2022. Job creation surged in June, led by consumer-facing services, leisure and hospitality, trade and transportation, and education and health services showed strong gains. Still, the market was fragmented, with manufacturing, information, and finance showing declines. And can I just note that seeing that kind of split in the economy is very concerning to me. That's very unbalanced growth, right? Bear in mind that ADP has underestimated the official BLS data for 9 of the last 11 months. In other words, if ADP was that high, then non-farms tomorrow is likely to be positive. Consumer-facing services industry had a strong June, aligning to push job creation higher than expected, said Nella Richardson, chief economist at ADP, but wage growth continues to ebb in these same industries, and hiring likely is cresting after a late cycle surge. On the bright side for the Fed, wage growth slowed. Job stayers saw a year-over-year pay increase of 6.4%, down from 6.6% in May. For job changers, pay gains slowed for the 12th straight month to 11.2%, the slowest pace of growth since October 2021. It should be no surprise that wage growth is slowing, since almost all job growth is leisure, hospitality, and trade utilities, while high-paying information, finance, and professional jobs all declined. Finally, claims coming up next are strongly diverging from this optimistic ADP perspective. Okay, except for that claims were in line, so we'll see what. So let's go read that story now. But hey, a 3% handle on unemployment is good enough for the Biden administration, even if it's not helping the Fed ease off this huge surge. Is not at all what the Fed wants to see. Okay, here's their story on the jobless claims. After unexpectedly dropping in the prior week, allegedly due to Juneteenth adjustments, initial jobless claims were expected to rebound higher last week despite the unexpected surge in ADP employment data. And they did. 248,000 Americans filed for first-time employment claims last week, up from 236 revised lower the prior week. However, continuing claims continue to drift lower at 1.72 from the 1.733 last week. That is the lowest continuing claims since February of 2023. The apparent decoupling of initial versus continuing claims could be more of a rotation, as we noted in the ADP report, from high to low-paying jobs. Market likes environment. Well, no. Yeah, the market. So before all of this, we had been seeing for the last, 2 weeks, right? Every time piece of data come out, interest rates go higher a little bit, right? Because remember, it was not too long ago. In fact, let's see if I can come and show it here on my chart. Yeah. Okay. Like we were at 3.75 basically a week ago, 2 weeks ago. And, at the beginning of June, we were touching 3.5. And now today, we're at 4%. So that is a fast, and especially this last 2 days. So it's very, very curious to me. Not that interest rates rose. Maybe somebody knew and was taking a bet on this. But it's interesting to me that they did it after the most active hours. Like it wasn't until after 11 o'clock Eastern time that interest rates started to rise. That's a little bit unusual. But the equity markets was not reacting to this. And it was kind of like, oh, well, even the equity markets had like a down week. It kind of appears to be continuing to shrug things off. And very often you're going to see like a sell off really hard and then they like completely recover all of it. In fact, wouldn't surprise me to see that again today. We'll see in about 45 minutes from now when the equity markets open, they may stage a rally off of the open for all I know. But I think that this has gotten to the point now where the equities market cannot ignore it. Once you get interest rates to 4% is like a really key line in the sand. You can't believe it, we are already at 4.044. Like I was looking at it, oh, this is too big. I don't know what I want to do here. Yada, yada, yada. And that was when it was at 4.02. I'm just sitting here watching, terrified to touch this. It's a little frustrating, but you know what? I've been on I don't want to take a whole lot of risk maybe this week and maybe the next 2 weeks. We'll see. But I'm kind of a little bit risk off overall. So, for personal reasons. So we'll see. I guess I shouldn't freak myself out about it too much. But where could this go? Well, maybe we should be coming over here and looking at some profiles and come into daily ZN. Okay. 12 is a key level of support from before the SVB fiasco. And then we've kind of got this space going all the way down to 108.25. In other words, volume profile, not too helpful for us. There's a decent pullback. From 85 to 136. So that's already a 50K change. They may actually be so 50 to 60,000 contracts is usually kind of a key limit. Fed's Logan is speaking here. We're getting some notes. Basically, he says that there's going to be higher, he thinks there should be higher rates. Let's see here. By the way, Fed still doesn't see evidence of a credit, quote, credit crunch from the banking panic in March. Several participants mentioned that credit conditions had not appeared to have tightened significantly beyond what would be expected in response to the monetary policy actions taken since early last year. Many participants noted that the developments in the banking sector appeared to have only had a modest effect so far on credit availability for firms. So, the real question here is, how much of the recent economic strength that we have had is due to the Federal Reserve injecting some money into the economy after the SVB fiasco? Because it's really starting to seem to me like what happened was they were concerned about a credit crunch, so they eased conditions a little bit, and then the credit crunch didn't actually end up being anything, and so we ended up getting inflation from it instead. Nick Timmerow's Dallas Fed President Lori Logan gets right to the point in her speech. I remain very concerned about whether inflation will return to target in a sustainable and timely way, and I think more restrictive monetary policy will be needed to achieve the Fed's inflation objective. So, this is curious that now, after we just get those crazy numbers, you immediately have the Fed speakers. A challenging and uncertain environment enabled the June pause. But I mean, it seems to me like they should have not paused in June. Logan voted to hold rates steady in June, but says it would have been entirely appropriate to raise them last month. My hope was the overall package of communications in June would deliver a strong signal to financial markets and meaningfully tighten financial conditions. Yeah, so going back to that meeting, I remember my take on it, not like what should the policy be, but what they're going to do, is that they're probably going to keep rates the same simply because they had been signaling for a while that they wanted to get to the summer and then pause, right? It kind of seems to me like, again, that the Federal Reserve kind of gets stretched between being able to react to the markets, if not future markets, and also being able to give the markets like some consistency that they can like bank on, right? Like if you come in and you say, oh, well, we're probably going to pause, and then you don't pause, then everybody they don't like that, right? And again, like controlling inflation expectations through policy transmission. Is that what they call it? We've shown from some models from Jean-Philippe's most recent work shows that that's like the most critical part, right? Oh, now this is interesting. What's Logan saying here? Some people say, so this is from Logan's speech. Some people say a lot of further cooling is in store from lagged consequences of the rate increases the FOMC has already made over the past year and a half. I'm skeptical about the potential for large additional effects from this channel. The lags have to be measured right from the starting point. Broad financial conditions matter more for economic activity than the policy rate itself. Of course, financial conditions respond to the policy rate and, in particular, to market participants' expectations for the future path of the policy rate. And so, in the current cycle, financial conditions began to tighten in early 2022, a year and a half ago, and a few months before the FOMC actually began raising rates. As soon as market participants started to expect rate increases, the last major tightening in financial conditions came around the FOMC meeting last September, more than 9 months ago. So although some sectors of the economy will be slower to respond, we have already had a fair amount of time to see the overall effects of monetary tightening. Moreover, the housing market looks like it may have bottomed out. Housing starts and home prices have trended up since January. Market rents had been fairly flat at the end of last year, but rose at around 4% annual rate in the first 4 months of this year. While housing inflation will likely continue to soften in the near term as a result of progress on rents last year, a rebound in housing would pose an upside risk to inflation down the road. Okay, so that is an excellent point there by the Fed member Logan, that housing is bouncing, and that's a big risk for policy here. Dylan, hey, how are you? How's it going? I've been a busy week work. Well, it's been a crazy week overall here, right? Not liking the way my microphone is set up here. I'm going to try and adjust it. What the heck? If Jordan Peterson was a nightclub bouncer, I'll have to watch that later. Hope you had a good holiday. Yeah, it was okay. You know, I went to bed early last night and I slept pretty hard. I feel pretty rejuvenated today. Definitely feel awake, at least now. Sometimes the sleepiness will come on me because, like, you know, my chemicals are a little weird sometimes. But I thought Logan has a point. Still think it might be a fake out to scare lungs, but I theorized as my I mean, you had just barely come in. So the big thing that happened this morning was the ADP was double the expected number, right? So this market is like in a real panic, I guess you could say, right? They're quite taken back. I mean, like I'm quite taken back. Like, remember earlier in the week I was saying, well, I'm anticipating that now that you had all of that stuff last week out of the way and the holiday out of the way, that you're probably going to see some more selling in treasuries. Okay. Yeah, I did say that. And I was saying, well, you know, I think maybe we could get to 4%, although maybe it will take a little bit longer than that. Right. Okay. Like that was all just based off of everything that we knew about what was likely to happen with monetary tightening and so forth, right? Now we come in and we get this number and we find out that not only is, you know, monetary conditions set to tighten, but all of the economic data is like in mind-blowingly higher than we anticipated. There is just absolutely no way I would have ever dreamed that ADP would come out at like 450. That's just so insane, right? So this market has been completely rocked by this. This is not a good look for equities, right? This is really is going to cause some problems, and I do wonder. It does seem like there was a lot of business activity to, like, you know, people moving between jobs and like new jobs and things like that. are these guys gonna kind of get like they were thinking that everything was hunky-dory and like it's safe to come out now, and then they get crushed? You know, like you have that late cycle pop before everybody gets screwed over. Because I'm looking at ES, you know, so if I come back here to ES, I'm still kind of looking at this thing like, you know, I kind of feel like we should be at 4,000. I kind of feel like that this whole time that it was like, oh, well, eventually we'll see 4,000 again. Then we moved higher and we kind of forgot about it. But now I'm kind of looking at like, well, maybe we should come back to 4,000 again. Maybe, I don't know. Which bond ladder is that one on the top left? So the very, very top left is ES. So it goes ES 30, 10, 5. Wow, the Hill. Drinking water from nearly half of U.S. faucets likely contains forever chemicals that may cause cancer and other growth problems, according to a government study. Yes, I have heard about that. So, actually, here's my understanding about lion's mane is that it is a mushroom that has kind of recently become popular. And a bunch of people have been talking about the benefits of like microdosing with lion's mane and so on and so forth. And then more recently, a bunch of people have been warning about it and giving pretty scary experiences having been on lion's mane and saying that it's really not a safe drug. And there's been all this drama on social media about it. I tell you what, there is a lot of drama on the internet these days. Like, I haven't been able to keep up with it all. Like, we've been so... I think that I was so distracted by, like, the Bud Light and Target thing that I missed kind of all of this other drama that's been going on around the place. There was like major drama in the Rust community. That's a programming language. There's this influencer, let's not call him an influencer, this YouTube creator called Miranda Sings, who is being accused of being a child groomer. There is all this stuff about lion's mane. There's also this stuff about glitter. There's this YouTube documentary where they go deep, deep, deep into the whole glitter thing because there's still this question of like the industry that uses the most glitter. They won't tell us what industry it is. And so that's why they made this industry, was to tell us. And the title, the clickbait title on YouTube, suggests that they figured it out, but then they didn't actually figure it out. The FDA hates nootropics. Well, yeah, it seems to me that we have some problems with the pharmaceutical industry and incentives. Yes, I think so. How bad that problem is and like what all of the specifics are, it's hard to say because, you know, you've basically got all of this research and people are kind of questioning all this research and stuff, right? But it kind of seems to me like if you're a pharmaceutical company and you have this product that you can promote and that you can pay to have studies about and so forth, that, you know, the studies tend to say that your drug works and ignore any of the negative problems with it. And then later on, we find out, you know, all of these bad things. It's the same with, like, here we're saying drinking water. So people have been saying this for a long time, that there's things in our water that are harmful. That like fluoride is harmful in the water, for instance. And then they all come out and they're like, no, that's not true. No studies support that, etc., etc. And then eventually the government does a study and is like, oh, actually, that is true. That is a problem. Well, okay. Well, so the place where... I'm not going to call it a nootropic. I feel like that lion's mane kind of is beyond your typical nootropic, right? Now you're talking about drugs with serious, because to me nootropics are like, herbs and remedies that can have, gentle effects in your cognitive performance, essentially, right? These kind of other hard drugs are not that. They can have very dramatic impacts on you. The most common being that they in some way temporarily increase neuroplasticity, right? Which is to say that it helps your brain make new connections. Okay. You've got to be really careful with that stuff. Okay. With that sort of a thing, because what happens is that when you are young, your brain makes a lot of connections. It's set to grow and to try and make as many connections as it can, right? As it figures out what you're going to do. When you figured out what you're going to do, then the brain starts to prune those connections, and it gets rid of the connections that it doesn't actually need, right? If it doesn't do this, what you get is you will be more likely to make stupid conclusions. So like the stoner that is constantly high on marijuana, the prime example of this kind of phenomenon, right? So everything is funny, every idea is a good idea, and they'll come up with all sorts of really bizarre connections between things that really just make absolutely no sense but are kind of funny to everybody, right? That's the kind of the problem that you run into, right? And what your brain is doing is it's finding out which connections are bad and it's pruning them, which is important to trading, right? Especially when we're talking about discretionary trading and trying to interpret the data that we're getting and everything like that. Sometimes an incorrect conclusion can be very damaging to you, right? When you think that something's there and it's not there, right? That's, this is just like technical analysis in general. People have a tendency to see patterns. And if you spend all of your time looking at charts and trying to predict the way that things are going to go based on those charts, then your brain is going to find them and it's going to make those connections even if there's no actual utility in it. Right? But, you can come into a place where you don't have the neuroplasticity that you want. When you get older, there can be problems with that. I think that there's other ways to deal with neuroplasticity. I think the most important one is to stay active. Keep working out, okay? Keep working out. That's the best way to do it. But, so that's kind of the thing. Yeah. I was going to say, like, one of the reasons why I kind of harp on this, your brain is like a neural network and how are we training it and what is the best way to train a neural network, is because, again, I see most retail traders are training themselves on data that is useless, essentially, right? They're wasting all their time, years of their lives, on something that has no efficacy whatsoever. So I was watching this yesterday. What's his name? Daniel Inskeep. I knew it was Dan. I was watching. So Daniel Inskeep is live streaming now. Like, after the stream, he's probably up by that point. So I was kind of like, I didn't really watch him. I was watching other videos, but like I came back, saw that it was over, and kind of watched the end of it. But like, the market had been up that morning, and then it was it come back a little bit, And so he was looking to see a push above that high, which is the typical like price action setup, right? And I'm sitting there like, why? Why do you think it's going to go higher? What is it that you know that makes you think that, okay, we had a bunch of buyers before that has kind of trailed off. They're not, the buyers have kind of come out of the market a little bit. It has come back and it has settled. He might not understand what that means but that's what we understand from what we know about the square root law and everything, right? It's come back. What's going to cause the next impulse? Is this some sort of multi-legged block order that's going to continue pushing us higher? Is there some other sort of information or news out there that you think is going to push? Like, why do you think it's going to go up? No, you think it's going to go up because of there's this stock pattern that you've been taught to look for. And so you're going to stretch to see it every time. And so, of course, it didn't work out. And then he was like looking at another one and he was like, well, but I took that trade once and it didn't work out. Right? So what's happening? He's training his mind on essentially a random line, right? It didn't work out one time, so he doesn't want to try it again because he's making a conclusion off of one data point. That's like, it's funny to me because, I mean, there's nothing like what he's doing is the average person. Like that's what the average person does, right? So, oh, well, this didn't work this one time. I guess it doesn't work very effective, right? When in markets, you really have to do it like 1,000 times before you really know how it performs, right? But if you don't have that data, if you don't have the ability to go and make that kind of data or somebody give it to you, then there's no way for you to know. Then what do you deal with? Well, you just, you look at what people tell you, and then if it kind of works, then it works, and if it doesn't work, it doesn't work, and you don't try it again. Right? But the reality is it's a random line. So all of the training and experience that you're getting from it is completely useless. Right? And you might say, well, yeah, but what harm is it if you trade something and it doesn't work out? I'll tell you what, your brain is making connections. Neurons are connecting with each other and organizing themselves in certain ways in order to enable the analysis that you are doing. And the older that you get, the more difficult it is to shift that network around. So the first thing is to focus on, actual data that you have to sit down and say, here's a data point, and here's how much order flow it could potentially drive, and work from that framework. Now you're actually doing something that actually has use. What's this Wall Street Journal article? As greedflation starts to fade, wageflation creeps in. By Greg IP. Softer demand, more supply, and rising labor costs all take the air out of profit margins. Exactly. So can I rant about something else that they actually kind of connect together? But let me try and get into this. Greedflation. So what they say greedflation is a company has the ability to raise prices, so they raise prices, and then as a result of them raising prices, their profit margins increase and they make more money. And so they're saying what's driving the inflation is actually greed and not something else. Now, this is an easy argument to diffuse, generally speaking, because you can sit down and you can say, well, yeah, but why are they more greedy now than they were before? Because you put more money in the system, right? They're able to make more money only because you put more money in the hands of consumers and they have more money to spend, which means that the market can support higher prices, right? But I have another take on this, and that is that a company has to do this in order to survive, because you're only thinking short term, right? Okay, there's a lot of money come into the economy. if I'm a company, I can choose to raise prices and make more money now, or I can choose to not do anything. Okay, I can say, oh, well, I don't have to raise prices, so I'm not going to do so because I'm a good citizen or whatever the deal is, right? Okay, the business that does that is going to get totally screwed, okay? Because all of their competitors are going to make more money, and that's going to give them more resources to become, even more competitive. So that's the first thing, is that you lose your competitive edge because other people take advantage of it and you don't, right? And then the second thing is that it's not like those profit margins survive forever, right? Eventually, the inflation comes, and then profit margins get squeezed, your labor costs go up, and it's not pretty, right? So you kind of have to raise as early as you can, make the money then, so that you can survive through the hard time that's about to come, right? And I think that what's happening is that whole cycle takes longer to play out than we maybe realized. Or at least than I realized, because I kind of thought, like, maybe that's 2022 and now it's all over and we just have to wait for the market to collapse. And no, it's turning into this is like a 5 to 7 year kind of thing, right? And if you're, so what I'm saying is, if you're a company and you want to survive for decades to come, then you kind of have to raise the prices, right? So, and why is that? Because the long-term incentive is that you need to raise prices. Okay. Where do you go to see the Okay, so the software that I'm using is called Jigsaw Day Trader. And what you would do is you would get Jigsaw, and then you would find a broker that supports it, which generally means, if a broker supports Rhythmic or CQG data, then you're good. So you would go and find a futures broker that has Rhythmic or CQG data or something like that. So like AMP Futures is the cheapest. Edge Clear is who I use. You find the broker. The broker is kind of the easiest way to get into it, right? I think they are trying to sneak attack the next bull run. Eventually, they want. Well, this one was kind of a sneak attack, right? I mean, this bull run that we've had as of recent really came by surprise. The one that happened in the spring. Okay. Anyways, so. Hold on. Take a drink here. Collect my thoughts. Incentives. Okay. There's kind of a secret about life and people that I think is being intentionally obfuscated by people in power. Because what people in power and what the popular culture will always tell you is that people are predictable, right? Especially you see in the red pill movement. You ever seen that in the red pill movement? They're like, women are all of the same. You got to be really they do have these tendencies. You've got to be really cognizant of it, et cetera, right? And they're trying to boil women down to one set of behaviors. And the reality is that if you go and you take one individual person out of the population and you say, okay, that is a female, that does not tell you really a whole lot at all about how they're going to react in different situations. Because the reality is that people are very random. In fact, I could come in and I could tell you a bunch of information about that person. I could tell you things about not just their background, but also things about their personality and even how they like to make decisions and things like that. And even then, you might have a very difficult time predicting how they will react in certain kinds of situations, because there's a lot of randomness just to decision making. And when you go and you look at the market as a whole, right, we have a certain situation, and what do people do, or what tends to happen after this event happens? Well, it goes up 52% of the time and down 48% of the time, dude, that's really random. That's something that there's a lot of randomness to. Okay. So the dirty secret here is that there is something that is very predictable. People respond very strongly to incentives. If you come out, so I'm going to pick the controversial example, okay? But it's the effing truth, okay? If you give a person, not you, if you give a person the opportunity to go and have sex with a lot of really good looking people and there won't be any negative consequences from doing so, most people will do it. Because every incentive is for you to get the pleasure, right? You take away all of the negative consequences of you doing that thing. There's no incentives against it. People are going to do it. And that's even, you take the most moral people, upstanding people. I mean, I think that we would all like to think that like, oh, I would never cheat on my spouse. I would like to think that I would never cheat on, but the reality is I've never been in that situation. Okay. If I had gorgeous women throwing themselves at my feet 24/7, I think it would be kind of hard. It's just the way the incentives are. Now, for me, I have a very strong incentive not to do it. Not only because I'm so morally opposed to it, but because, divorce and everything would be very damaging to me, right? But, there's not a whole lot of incentive against like premarital sex, especially not for women anymore, right? And so most people do it, right? Incentives work incredibly well. And so people in power are always looking for ways that like, how can I change the law? How can I modify systems in order to create incentives behind the things that I want to happen and incentives against the things that I want to happen? And that's how you get things like this diversity, equity, and inclusion incentives for corporations. Why are all of the corporations suddenly going woke? Is it because there's been some sort of a cultural change and like everybody understands? No, it's not. It's because somebody went and created a monetary incentive for them to enact those policies, right? They created an index and they said, we're going to give you more money or, these extra incentives if you score well in this index, right? And so the companies go for it. And the companies go for it against some of their other interests, like just overall profit, right? Like Budweiser. Because it's all about incentives, folks. A byproduct of money being so cheap, perhaps. That money being so cheap makes it easier to create those kinds of incentives. So you think you might be right. So, now that we understand the incentives part, then this comes back to the inflation conversation that we were having earlier, right? The incentives are for companies to raise prices. That's just the way that it works. And we're like, you're living in denial if you think that they're not going to do that. You just come in and say, well, yes, I understand that every incentive is for you to raise prices, but we think that you shouldn't. You're a bad person if you do, right? Nah, they're going to raise the prices, guys. They're going to raise the prices. The corporate wokeism is obviously reeling in now that money isn't so cheap. At the very least, where stuff's going when it's cheap again. It's just excess. It's how you wound up with studios openly blaming audiences for their movies failing. Yeah. Well, I certainly think you could say that at Disney, right? Essentially what has happened at Disney is they have basically thrown profit by the wayside in favor of pushing these storylines. But I think that it's an interesting thing to watch is like, what kind of stories do they make and stuff? Because I tell you what, especially at Disney, it's like the same story over and over again, man. And I'm telling you, your mind soaks that stuff up, especially when you're a kid. And the message that it seems to me that Disney is trying to put out there is that you need to give your wealth up to less advantaged people in order for them to be successful. That's what their message is. Which is total bullshit, by the way. Total bullshit. Listen, this bothers me because I want people to be successful, and I can see, what works and what doesn't. Okay? What works? Personal responsibility, personal development, working hard, working smart, and putting investment into yourself and making good decisions, and that's how you increase your quality of living, right? What is not effective at doing that? The collective. Right? The collective will come in and will say, yes, we can make your life better. We can do, but it never does. It never turns out that way. I watched The Menu earlier this year, and before that, I hadn't watched a movie since 20. Oh, is The Menu that one where this chef creates a final meal that's like, he kills himself and a bunch of other people and stuff? That was weird. I watched that a good portion of that movie, but I came in. Yeah, it's basically Gordon Ramsay if he went nuts. Yeah. So I missed the beginning of the movie, so I didn't really understand what was going on. What was the motivation? Why was this, but it was a crazy movie for sure. But that's another one where I'm kind of like, what is it actually training in you? I'm telling you. So again, your mind is a neural network. When you're watching things, it's training your brain. Now, how does it train your brain? People used to think that it was like, if you watched a lot of violent content, then it teaches you how to be violent. No, that's not how it works. What you really need to be looking at is, what is the end result? Okay, there was in any movie, there is a problem, and then they do something and there's a result. And, the situation is different from the beginning to the end of the movie, and that's what we call story and character development, right? I'll give you an example of a storyline that I think is good, or something that kind of trains you, is Jurassic Park, right? So what is the character development in Jurassic Park? Well, the main character doesn't like kids, and then he is forced into the position where he has to protect children. And he embraces that role, and at the very end realizes that he doesn't actually hate kids as much as he thought. Right? And what is this? This is a classic story that almost every man goes through, every young man goes through, is they're like, kids are stupid, I hate kids, and then you get one of your own. And your whole life changes to center around that child, and you completely change your approach, right? And what that movie is doing is it's showing you that what that transformation does to people, right? And it's training your brain to understand that, right? But some of these other movies, what is it teaching, right? That you should kill wealthy people, right? That giving people entitlements are what will help make them successful. That's what they're trying to program, man. Straight up. Is you don't just have the same storyline over and over again. And it might not even be a conscious thing by them, but that's what they're teaching. You're an old school consumer of gore. That the way that whole thing has worked on the internet is kind of weird, because it used to be that you could just see the most disturbing stuff on Reddit, right? And then they kidified it, you know? It's kind of funny how they got rid of all of the gore and violence, but they kept all of the pornography. Right? Like that's what. Okay, so do we know what's? Oh, it's absolutely the ADP number, Lucas. Man, how? I think we need to get you crowdsource you a Financial Juice subscription, man. Do you see that number? 225 expected for US ADP employment change. Actual 497. More than double the expectation. Now, Alligator is saying that there's a lot of skepticism on this figure and market commentators don't believe it. Yeah, our society really because there's strong incentives behind it. No, it wasn't the 8, it was the 815 release. Oh, good morning, Gus. Dude, so oh man, I have another thought for Gus. I'll go do this real quick while I got Gus here, right? So something in that data set that really drives me crazy. Okay, is that like you have all of these entries in here, and some of them is like, oh, it will tell you like what the total volume for the day was. And, you know, like there's metrics that it can give you at the end of the day that are included in the data set, right? And then there's also like trades where it says this was the aggressor was the buyer or the aggressor was the seller. And then there's also volume where they can't categorize that and they just say that it's an implied trade. So if I want to go into pandas and pick out only the entries that have to do with actual volume events, I have to say when this field equals this or this or this. That's a little annoying. And if you use the wrong like kind of qualifier, because the thing is that there's like a trade, there's trade, and then there's trade volume. So if you say, oh, if it just contains trade, then it will also pick out that trade volume entry that you don't want. Right? Do you feel this is going to be the tendency for the rest of the session? Well, so it seems to me that they already kind of reached the limit. And so I wouldn't say that it's impossible for them to go lower, but there's a really good chance that we've seen the low of the session and that it just kind of like sputters sideways from here. Just because we had like 60,000 contracts net short, you know? So like there's just not anything left to do anything. So you probably like look at this range here on the pullback. You got a pretty wide range on the pullback. Okay. Now Alligator is saying, you know, there's a lot of skepticism on this figure. That may be warranted. We'll have to see. But I'm kind of like, well, it's summer, and I'm also trying to relax a little bit these next few weeks. So I'm just going to kind of sit on the sidelines today because it's, you know, more volatility than I'm really willing to mess with right now. So, well, how do I feel about this number? Well, so first of all, I think that the ADP number, yeah, so this is interesting, actually. So number one, the ADP number does not necessarily correlate to what the non-farms number is very well. It should, and it has at times, but especially as of late, it doesn't. Like sometimes they'll be like wildly different. So I don't think that really means that tomorrow non-farms will be really positive too. It could be, but I don't think that I have enough confidence in saying that because ADP seems to predict it poorly. But then the other issue is that, a lot of the non-farm numbers that we've been getting have been kind of suspect, and like they end up revising them later and all of this sort of stuff. So I really kind of question how much data, how much information we're really actually getting from like the employment data right now, But the split side of this is that the whole thing has been that we're raising interest rates to reel in the employment market, and that doesn't appear to be happening at all. So regardless of how real this data is, I think that interest rates are still going to be tilted towards higher interest rates. That's how I think it's going to be. Anyways, going back to the thing that Uzi said, our society really people really prioritize sex and pornography, right? It's nothing generates more dopamine in your brain than that. That's why the later that you are introduced to those things, generally the better it is for you. Or like the more, like there's been all these studies that show that the kids that become sexually active earlier in high school tend not to do as well as the kids that don't get sexually active until they're in college, for instance. It's because it's such a strong incentive that dominates from the point at which it's introduced. It dominates the wiring of your brain. And so then your brain isn't able to focus as much on some of these other things. And then the net result is that, lots of people. And so, you've seen, there was remember this whole drama earlier about how Pornhub is blocked in Utah. Like if you try and visit Pornhub's page, it says you get a video about why Utah's policy is a really bad idea and all this sort of a thing. I think you're actually, so like first the thing is that everybody kind of, it happened, and I think everybody's forgotten about it. I haven't heard anything about it lately. Nobody complained. Of course, nobody's going to complain about it, so I don't really know how big of a problem it is. But I don't see that rule changing. I don't see that rule. And in fact, what I'm seeing is there's been a couple of other states that have done it too. So probably it's going to expand. And you know what? For good reason, because it's really, really bad for teenagers to watch porn. It is. It's very bad. Dude, if you're a kid, please avoid that at all costs, just because it harms your mental development. You're not going to be as successful. Yep, it's blocked. I think there's 5 states. I think there's 5 states that do it. Because what's going to happen, what I think is going to happen is the one website that says, oh, well, we're not going to do this, we're just going to complain about it, right? So then what happens is everybody goes to the other alternative websites, and if those websites are able to sort it out, they go to those, right? And meanwhile, the legislators and everybody else realize oh, actually, this wasn't actually that big of a deal, and it seems to be working pretty well because it does make it a lot harder for the kids to get access to that sort of stuff. So I think you're going to see it spread. It could be wrong. That's super speculative, but I think you're going to see it spread. But I'm just getting to the point to me here is I'm saying, be careful what you consume, right? I'm trying to, I used to spend a lot of time on TikTok because it was I catch wind of lots of new and developing things from watching TikTok, and I learn about how content creation is going so that I can adjust my own content creation. But TikTok has changed, man, and I feel like it's just junk now. And I want to limit how much I spend doing that as much as possible. Again, it's not. Doesn't seem like it's very helpful towards the goals, What is useful towards the goals? Waking up early. That's probably the biggest thing. Wake up early, folks. You guys are all here, so that means you wake up early too. I guess for you guys on the East Coast, it's not that big of a deal. Oh, you do wake up at 5:30. Good for you. Good for you. Yeah. I mean, I think that the main reason that waking up early has so much benefit is because most people don't wake up early. But either way, having that extra time to focus on work is very valuable. On personal work that's like personal work, like your side hustle or learning or whatever, right? Because you're more productive in the morning. You just are. It seems like forever for the morning. Jeez, Brad. I really like waking up at 5:30 and going to bed at 9:30. You know what, guys? Nothing interesting actually happens after 9:30 at night. I mean, like, of course there's 9:30 to 10, but after 10 o'clock, like, that's the end. Nothing truly valuable happens after 10 o'clock. Rarely, at least. We had friends over Friday night 2 weeks ago and stayed up until 4:30 just catching up. Oh, dude, yeah. Oh. Took a week for your body to get back to normal. So, you know what is something I haven't quite sorted out, but I've just noticed a lot, is that many very successful people, particularly people that have been very successful in finance, tend to have extreme personalities that do those sorts of things. Like, don't sleep very well, smoke a lot. Oh my gosh. Like, I've been reading the book More Money Than God, and there's talking about this one manager that had a real temper and he smoked a lot, and the amount that he was smoking was crazy to me. It's like, I couldn't understand how a person could smoke that much. I don't drink, so it was solely staying awake and throwing me off. Yeah. I'm on the programming until 11 p.m. kick. Yeah. Yeah, I really like to do it, like, after I do the stream, and you know, there's usually morning stand up and all of these other things, and then that's when I like to get straight into the programming. If I get into it right then, oh no, he was like smoking like 4 packs a day or something like that. Oh, thank you, Lucas. Yeah, we do have. Okay, so Logan is still speaking, by the way. 7:45, we've got PMIs, and then at 8, we've got ISM services PMI, which is a really, really big deal. Yeah, so why is it that you see so many of those people? Is it that that's the kind of person that just ends up taking a lot of risk and has the success? I don't know. But I noticed that a lot. But that's kind of where this comes back to this other thing, that it's like, you as people, because of the way that our minds work, we're very social learners, right? If somebody else has had success and I can duplicate a portion of their neural network, then that's a real, you know, I can take a shortcut, right? But then how do you determine who's effective, whose network to try and emulate, and so forth? And in the market, you have this problem where people can be very, very successful by sheer dumb luck. Like, if you take enough people to flip a coin, you know, there's going to be this one guy that ends up with heads 90% of the time, you know? Because that's just the way that the distribution works. Once you get beyond just the simple percentage, it's not enough to really tell you how things go. My smoking was coincidental, I guess. My wife's was pure. But like, that's the thing, is it's trading can be really stressful, and so smoking can really alleviate that. But it also kind of makes your base arousal slash stress level higher, and so in the end, I think that it doesn't help you. But a lot of traders smoke, man. A lot of traders smoke. You're 22. Yeah, well, you're a little bit older. You're in a different generation where that was a thing, right? The kids these days, they don't get into that as much. I don't know if it actually. Well, I was kind of where I was trying to get to was that, like, my understanding is that your base stress level is a little bit higher when you're not smoking if you smoke. So is it actually beneficial to trading or harmful to your trading? I don't think we have enough information to know. But I just, from watching the people that I know that smoke a lot, that's kind of like, oh no, I could not stand being that way. I would have a mental break if I was like that. Had it go, well, okay, so they will vape. Yeah. but like smoking is not very much a thing. And I think that you will probably find that in 10 years' time, vaping will go away too. Because they're only just now starting to come out with the research showing how harmful vaping is, right? And once the politicians turn against that as well. Yeah, my cousin, yeah, because that's what I see is these people is that, like, they'll get stressed out really, really quickly, and then they have to smoke. And then, like, you can't do anything else while you're smoking. It's like... Trading doesn't hit you emotionally anymore? Well, that probably just means that you're not trading a large enough size. That's what it seems to be with me, is that I can come in here and I can trade one lot and I'm fine. But if you turned around and gave me 5 ZN contracts, I would be shaking, right? Like, you need to quit. Yeah, well, you should. Cold turkey. Cold turkey is the way to do it, fortunately. As a missionary, we helped a lot of people try to quit smoking. And, out of hundreds of people that it was proposed to, I can only think of 3 or 4 that actually did it. And all of them quit cold turkey. So, Joseph Wing is retweeting something he said earlier, a month ago. Hedge funds have returned as the marginal buyer of cash treasuries through a resurgence of the cash futures basis trade. This may suggest that the real money community has tactically increased exposure to duration. If so, the pain trade is higher yields. So I think that seems to suggest that, yes, rates could continue to increase. Okay, so they decreased for PMIs. S&P Services PMI final 54.4 versus 54.1. Pretty close to inline. No, if it doesn't seem like the market's reacting to that one too much. This PMI at the top of the hour is going to be bonkers, right? When I started watching you, I was knocking out half a pack, smoking in my office. A training session, decided to quit smoking in my office, threw away a ashtray and remodeled the whole room, and I haven't smoked in it in 2 years. That's good. Oh yeah, it's like smoking inside or in your car is the worst. I don't see how people do it, but so like I've been spending a lot of time with my uncle because we've been doing woodworking. We're still working on that desk and kind of picked up some other projects too. And he's a smoker, man, and you just like you smell it on him. Like when he comes over, like when we installed the gate, and as soon as he walks in, you can smell him on it. And I just, that would drive me crazy. That would drive me crazy. No, Mr. M. So there is the S&P PMI and there's the ISM PMI. So the S&P PMI is kind of like more backwards looking, and the ISM is more forwards looking. So that's why the ISM services PMI tends to be a bigger market mover. But today it looks like they did completely pull the liquidity. Like the market makers are being pretty cautious today because of, you know, how things got all riled up by that ADP. So I'm going to bet you that the PMIs that we have at the top of the hour, that you're going to see the liquidity almost completely pull and probably see significant movement off of it. And who knows which way it's going to be. That's what gives me hope. If I could cold turkey it, it'd probably work for me, but it needs to be both my wife and I. Yeah. Gotcha. Yeah, it's not easy. And it's that same sort of a thing where it's like your body programs itself to do it, right? Like people talk about how you hold it and all, you know, all of these habits and stuff that like never go away even if you stop smoking. See, once you understand that your brain is a neural network that gets trained by what you expose it to, now you can go, oh, okay, I can intentionally program that to be the way that I want, that will be most effective in the things that I want to do in my life. You can intentionally train it. And you become more effective. Doing MAFFS. I don't know what that is, but that must be a type of cigarettes. You spend 2 hours a day just smoking? Having that extra, really? Oh man, I tell you what, not having to drive into work has had such a huge impact on my life. For sure. Because even if I go and do a heavy workout, I get done with the workout and I've got a few hours to just do nothing. And of course, I'm not going to do anything after that point because I'm usually just exhausted. Probably need to spend more time breaks going for walks, because I don't walk as much as I used to when I was at the office, right? But oh, when I'm doing, oh, I see what you mean. I understand what you're trying to say now. That's funny. See, that's just a weakness in my own neural network, right? Is that I will see a word or a term that I don't recognize and I immediately think that it's some sort of acronym. You do that, walk every day a couple miles. Yeah. So this is kind of a weird thing about trading. This is another one of those things that I don't think I've completely figured out. There seems to be real benefits to going all out. So like high intensity training, sprinting, Olympic weightlifting, like whatever it is that you're going to do, it's like you're completely expending your whole everything into it. Because then when you come in and you're going to trade, you're used to being in that state. You're used to your body being in its highest excitability, whatever it is, you know, the stress that, you know, and you can just go in and you can do it, right? But what that also does is it weakens your nervous system. Weakens your nervous system overall and can negatively impact your decision making. So how do you work out hard and also maintain that? You have to like eat really well, is I think part of it. But I don't think that I've been able to quite get that to work. Because when I'm getting close to the end of a weightlifting cycle where I'm actually going to do a competition, I always seem to make really bad trading decisions. And I think it's because my nervous system is depressed from working out so hard, right? Because what you do is you really tax the nervous system so that it super compensates. And when you're in that immediately afterwards period, that's when you do, you know, it seems to impact your decision making. I take 1 week to move and the twos go to 5%. Yeah, you know what's kind of zany to me is having watched this move this week. I didn't even realize until this morning that twos were at 5%. Yeah. I like the Olympic weightlifting because of the central nervous system workout. Yeah. Nothing really nothing hits your nervous system as hard as that. For sure. One of the things that I've learned that I haven't really been able, because I haven't like really trained for a competition in a while, really since COVID, because basically the kid requires so much energy and everything that I just haven't been able to fully dedicate myself to it. But next time around, I want to drink a lot of Gatorade through it. Because I think that what happens... Oh, so this reminds me of something really interesting I saw this morning. So these people were doing research on your immune system. And it was like, okay, so there are certain types of cells in your body that will go after the bacteria or whatever the deal is, right? And when one of these cells finds something, it will send out a signal to attract other stuff to it, to attack it. And that signal is calcium. It's like calcium signaling. And so what they were finding was that in people with autoimmune disorders, it will send out the calcium, and for whatever reason, the calcium like doesn't stay localized. And so like just all of the cells in that area just congregate to that one spot, and you get the autoimmune condition. This would also partially explain why like a lack of sunlight tends to hurt your immune response, because vitamin D that you get from sunlight plays a major factor in calcium. And I have kind of immune disorders, right? Like I'm allergic to everything. And I have the gut problem, which is also an autoimmune problem. So I'm kind of wondering like, oh, do I expend more calcium than the average person because of that? Do I need to be supplementing my calcium more? Because my mom is probably very likely to get osteoporosis. Seems like she's probably going to get it. And I'm concerned that I could get it. And maybe that's all related. Isn't that crazy? So last week I did my weightlifting, But then I also got a punching bag, so I've been doing a bit of punching. And I just want, like, because it's funny, like, the first time I did it, my hand hurt. So I want to keep my hands conditioned, you know? Not that I'm ever going to box or anything, but it's kind of fun. But doing both of those in one workout was too much. It's too much. I was spent for like the next 2 days. That's the amazing thing about it, is that when you really have some research to show you why the market behaves the way that it does, and you have ways of developing some edge, then you actually have the energy to expend on these sorts of things too, trying to get your body to the optimal place and things like that. Right? Well, Bitcoin has finally come down towards the lows of the day. I'm interested to see where that goes from here. If the market really turns into this 2022, interest rates are going to go even higher sort of a situation, Bitcoin could get really creamed by it. And it seems to me like they're really leveraged over there. So, like, if there was another sort of stop run lower in Bitcoin, it could be like the end. Like that could end Michael Saylor, for instance. But we'll see if it actually happens. They're probably going to fight it real hard, right? Still got about 3 minutes to our PMI for services PMI. So every time, the new tweet deck, it seems to me that if you don't have it open, it doesn't update. So let's just wait for that number. Consumers panic search pawn shop near me. Interesting. Bond market faces reckoning from inflation boomerang. Right, 1 minute. I think that the treasuries have kind of rebalanced pretty decently, so we could have a move. Services, the expectation, by the way, is 51.2. Doesn't look tradable to me. The liquidity is just completely gone in the micros. Okay, so it's higher than forecast. Jeez. Okay. So they dipped to new lows, but they are kind of getting sucked back up there because there's just no liquidity. So over here in the micros, the spread is so wide, I don't think that I can really deal with that. Yeah, that was pretty excessive. 53.9 versus 51.2. How big of a deal is that? I would say that that's just kind of like a standard okay beat, but like in the current situation, whew. So do you see there, like the micros are still like right there at their highs? So what happened is if the micros had actually gone as far as the treasuries did, they probably would have gone to like 407. The spread is still pretty wide though. Can you imagine if you wanted to sell here and you market sold, that would, you know, you're getting such terrible positioning right now. Okay, well, the spread has come back in. So also the volume here in ZN seems kind of tight. So this kind of looks to me like some traders may be clamping down on volatility now that the event has passed. So I would just want to point out, well, let me reset things to kind of show you. I've been seeing more than 1,000 trade here at each of these prices. So like there is way more latent liquidity out there than you see resting. There's 13 to take it down, right? So that to me is not very indicative of like a large meta order trend sort of a thing. That's more like options hedging activity. It's likely, I think, to rotate here between 12 and 20, let's say. 18 is is kind of the closer area, but okay. Because 18 is where it was before the news. Good news is bad news again, and stocks seem to suddenly be aware that higher rates are bad for long duration assets, says Zero Hedge. Okay, so here's this other story I had kind of picked up on. Cash-strapped Americans are panic searching pawn shop near me. The search trend spiked to a record high at the start of July and is an ominous sign the consumer might be pawning items or selling things that were possibly bought during the COVID boom to raise quick money amid the worst inflation storm in a generation. Let's begin by analyzing Google search data for pawn shop near me. The search trend started surging in January and exploded higher in the last few months to record highs just days ago. Some of the most interest is in the Deep South. Okay, well, basically what I'm seeing in the narrative today is a bunch of people all of the sudden saying, oh, hey, maybe the inflation narrative isn't done yet. So there does appear to be some hesitancy at 18. Let's not call it resistance. Because then you'll all try shorting it. I don't know if that's going to hold or not. Once the SNCC Timorous, the number of job vacancies declined to 9.8 million in May from 10.3 million in April, according to the BLS. This lowered the job vacancy to unemployed worker ratio to 1.6 in May, the lowest reading since October 2021. Okay, so Nick Timorous is just, for some reason, pointing out that according to the job openings and everything, the labor market is not that great, and that this may be kind of like a late cycle false signal. This is pretty... I feel like this action in the ZN is pretty tense. It looks like they're going for new lows. Well, not new lows, but it looks like they're trending down again. So it doesn't look like it takes very much to move this market at the moment. So one of the things that I'm seeing here... Yeah, okay. It's a little late on the draw here. Yeah. Okay, so something I'm noticing is that the dollar is rallying pretty strongly right now. The Japanese yen has not been moving as much as the treasuries have. Although they are pretty in lockstep. So that is giving me a hint that they could continue to push here. But I think that there's probably still going to be a lot of shoving in this area at first. Okay. Well, so what I'm seeing in the treasuries is it looks like the cumulative delta has balanced back out. And you're in a bit of a liquidity hole of sorts that's quite wide. It's very easy now to move across this area around this node at 16.5, let's say. There was a little bit of a break. But because the volume is balanced out, this might be, if there's going to be more selling today, you know, I think that you could start to see it now in the next 30 to 45 minutes. I do wonder, you know, this is one of those things where it's like, well, how much further can it go? You know, and maybe it doesn't go much further. But I've definitely seen many times where I felt that, and it just did not stop the whole day, right? And it's been doing that a lot lately, in fact. I should also note that while we have gotten a little bit of favorable downside action here, it looks like it's within the range, not super key changes in volume or anything like that. So gotta keep an eye on that dollar there. Another thing I should point out is that we have flattened through this move. I would have thought maybe, well, I don't think I would have made a strong conclusion, but I think I'd be leaning towards it would steepen, because it'd be like, oh yeah, we're going to be tightening into a recession, that sort of a thing. You know, that's what's happened past few moves like this. But no, this one flattened. This move is different. This move is very different from any of the other moves that I've seen. Really, I would even argue, well, like all summer, like this, I think is a key turning point for markets potentially. Okay. Interesting. So I was thinking about taking it off at 10, and it kind of went bid for a second. I'm like, okay, let me like just kind of orient myself here and think about if I really want to take it off. And then the big order at 29 showed up. Sorry, that 29K at 14 showed up almost immediately, and we kind of came back, so I was not able to get it at all. Yeah, I agree, Octavius. We might be in the beginning of the second leg of a meta order. I agree. But I don't think that we've seen it yet. I'm not so sure that this decline that we've seen is that order. Because I'm not really seeing the cumulative deltas really move. This, I think, is kind of more like, okay, we left a huge liquidity hole going all the way down. We completely retraced it, and then we kind of fell back down to the bottom of the range. So I think that this movement is probably still largely about liquidity. Okay, so there we are again. But like my larger thinking here is that this should be a pretty big shift for the markets, and that there's probably going to be some relatively large players that are just going to have to continue to sell treasuries today. Let's recenter that. Okay. So trying to figure out how far away from the lows are we actually. Pretty far. Pretty far. The 30-year could maybe get back there, but it'd take quite a bit to get the 10-year, and probably some additional flattening too. Those last few ticks, though, you started to see this selling come through and dominate a little bit, though. I need to speak a little louder. Not getting into this blah, 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 blah kind of speaking. I'm really interested to see if the micros punch through 05, if they react kind of in a way. Because like I said, the micros did not go as far as the actual treasuries did. Probably because this was all just, orders trying to hit into like zero liquidity, and the micro treasury futures being like, I'm terrified to even touch it. Ah, that was a big downtick. All ticked at once, strong offer on it. Decent amount to trade it through, follow through on the next tick. Okay, I'm getting a little clicking here. That was some of the offers firming up behind the move. $30-year 9s leading the way. It kind of feels to me like the 30-year has been catching up after so much flattening from that news. Like there was pretty strong flattening, and it's kind of been steepening back out and recovering it. Okay, so a little bit more liquidity there at 12.5, preventing them from getting further. That downtrend that we've had, though, has been pretty persistent, hasn't it? Looks like I'm taking 10, though. Yeah, I think so. I'm feeling a little bit conflicted about doing that because, you know, just the kind of day it is and everything, you know, that like there's potential for it to do all sorts of crazy things, right? Oh, wow. Okay. But at the moment, I'm still not seeing the kind of selling that I anticipated. Instead, I'm kind of more seeing a market that's oscillating around quite a bit in relatively light liquidity. Yeah. You know, I don't know if I'm more antsy watching this having just taken the profits, or if I'd be more antsy if I was still in it, because it is playing around a lot there at 13 now. But without signs of like a real flow, like a real block order coming through, I didn't want to lose what I had made just from the range, right? If I start to see that volume come through, I can get back in. But what I'm seeing there right now kind of suggests to me that they might back up a little bit more. They might kind of start to rotate around that 13. Let's read this story about the PMIs. Following the tumble in the manufacturing surveys, S&P Global reports that the U.S. services sector deteriorated marginally in June, but did improve modestly intramonth from the 54.1 flash print. The ISM services print was expected to rise modestly in June, but instead soared to 53.9. All this comes amid a surge in positive macro surprises. One of those things is not like the other. Yeah, showing that the two surveys are kind of diverging a little bit. But I would expect that the next S&P 1 cent show the strength, right? Global reports the cost pressures picked up as the second successive fall in cost burdens and manufacturers was offset by the steepest rise in service sector costs recorded since January. But ISM says the opposite, with prices dropping to the lowest since March of 2020. June saw encouraging resilience of the U.S. services economy, which helped offset a renewed contraction of manufacturing output to ensure the overall pace of economic growth remained encouragingly solid. The survey signals GDP growth of just under 2% for the second quarter as a whole, a bit with June seeing some loss of momentum. Demand for services has remained surprisingly buoyant in the face of headwinds from increased cost of living and higher interest rates, with spending still being supported by a post-pandemic tailwind for spending by consumers in particular. Higher interest rates and recent market gains are also boosting demand for some financial services. The worry is that although selling price inflation has cooled further, June saw increased cost growth in the services sector. Looks like they are going to go higher here, huh? Should have held it. The worry is, which has been the main area of inflation concern in recent months, higher wages in particular are driving costs up and could keep selling price inflation stubbornly elevated in the months ahead. So slowing economic growth and service sector inflation on the rise, not what Powell ordered. Yeah. I just keep saying that, like, everything that we've been seeing this week has been like really not what the Federal Reserve wants to see, right? Okay, so they did push a little bit lower, but it's still kind of showing some difficulty getting above the 13.5, or sorry, meaningfully below 13.5. Like, they're getting sucked back into the hole, I think. I probably did take my trade a little bit too early. But I'm still not seeing that kind of selling that I want to see. Maybe in the 5-year, but not in the 10-year. So, you know, I think that 10 or 15 is still okay. Either way, I'm going to double check here that that's all working correctly. Yes, it is. After missing that one earlier in the week, you know, gotta double check that the live account is all working correctly. So here's a thought. Yesterday, we didn't really see the selling come in until Europe was set to close, essentially. After the stream ended, essentially. Will we see similar things today, or are they largely done? Kind of what I'm seeing right now kind of suggests that they feel like they've done their business today. Could be wrong. Could be they're being sneaky. Oh, wow. Well, they took 3,000 out there at 13.5 very quickly. Then it ticked up. That's kind of curious because that's not being accompanied by any kind of change in the currencies. So I'm going to reset right there because that perked my interest. Nick Timmeros, one way to think about this figure, if the Fed was trying to return the vacancies to unemployment ratio to its pandemic peak of 1.25, then it is halfway there from the post-pandemic peak of 2. The rate of workers who are voluntarily leaving their jobs had been returning closer to pre-pandemic levels, a possible sign of less tight labor markets, but those measures ticked higher in June. Quits can rise when workers think they can get better pay by changing jobs. Okay, so a lot more stability around this 13 area. It's kind of been going sideways here now for about 3 or 4 minutes. So that is a kind of a sign that, so I was saying, like, maybe I gave up 5 on that, but now I would definitely be thinking about getting out. because it's starting to give that look like, oh, okay, we're just going to not do anything for 45 minutes. Let's see how it goes. You know, if somebody decided to come in and start hitting this market, they could come out of nowhere. Oh, Threads. I forgot about that. Bloomberg opinion. What's next for Threads in terms of app improvements? For one, there's a reason why we're doing this live stream on Twitter. Oh, really? Okay, so remember we were talking about Threads yesterday? So I've learned a couple more things about Threads that were really pertinent to that discussion. Oh man, are they gonna break? Ooh. This was like a thing. It could just come out of nowhere, though. Sure did. They had me fooled. I really thought, oh, they're done. That move right there, that reminds me a lot of the move where things just kind of broke lower yesterday. It's just like all of a sudden it was game on. Can it continue to move down at that pace? There was some. This is 25 at 10, an uptick. Okay. Well, getting 20 or 25 out of that instead of 10 would have been nice, but. Nassim Nicholas Taleb, the temptation is to show your adversaries your strength and hide your weaknesses. It is much more effective to show them your weakness and hide your strength. Can you prove that? Okay, so anyways, Threads. Okay. Threads is actually just another interface to Mastodon. That's why they're like making a new thing and it's not just like part of Facebook and yada yada yada. Threads is just another interface to Mastodon. I am still very skeptical of the whole Mastodon take on things. In the short term, I think that it could probably work and see some growth, but ultimately I think a centralized service would probably provide better service. So really what this is an attempt by Facebook to try and finish off a competitor. To really get a competitor to Twitter really up and going. We'll see if it works. In other words, I'm saying this may be a little bit more cynical of a play than we might realize. On the other hand, if the people at Facebook really genuinely believe in it, then that's also a pretty big shift for social media companies, right? We'll see. Obviously, I don't trust Facebook at all on this, right? Threads uses their stupid casino algorithm for the feeds and Threads, and there's no, what's that? Are you talking about something with Mastodon? I know one of the things that I thought was so, oh man, I really is like screaming at me, Seth, why aren't you still on? This last move in the last 5 minutes has the volume behind it that I was looking for. So I was just not patient enough, I think. How far does this go today, guys? So I had an 0.3 half. I took it off at 0.4 half. We're at now 0.7. Oh, Facebook's feed algorithm? Probably not. Okay, so like one of the things that was funny was like there was like key functionality for Mastodon and stuff that they hadn't implemented yet because they were having problems with the protocol. So like it really is like something that they just like pieced together at the last second. And oh yeah, I don't know if that maybe so the question is how does it, I don't know. I would think that it would be able to do that, but the thing is that okay, so the real question here is how does Facebook make money off of this, right? So if you get everybody using Threads instead of Twitter, then you make money off of this by killing your largest corporate competitor, essentially, right? But then you have this Threads, and do you make money off of it? You're running this big server, and maybe you don't, or it's just ads. I don't know. But then you start putting the algorithms behind it. Now you're putting computing resources on it, right? So you're increasing the cost of the application. And are you going to get a return back on that? If the purpose was just to kill Twitter, you know what I mean? Yeah, if you want user commentary as stuff happens. Yeah, and kind of the issue that I see is, again, like it's Mastodon. So like the problem with Mastodon is that all of the content gets splintered. Like, yes, there could be all of this content happening on the Mastodon platform, but it's split up between a bunch of different servers. And if you're not actually connected into those networks, you're not going to see it. And then you're constantly adding more and more servers into your list and stuff like that. Yeah, right. Like, it essentially, you never get the content that you want, right? In Twitter, the content is all there, right? How do you get Threads to the point where you're getting enough of the content, right? Well, probably it's that everybody's using the Facebook's server. And so then, does it really matter that it's Mastodon? I mean, you can easily migrate if you want to, but the reality is that everybody's on the same server and they have all the power, right? You know what I mean? Like, I'm just not sold on the architecture, right? And I thought that Threads was like its own separate thing. So now that I know that it's just Mastodon, then it's like, oh, okay, so all of these problems I had with Mastodon then become relevant again. Real-time chronological curated feeds. Well, I don't know about that. That's why we use Twitter. That's certainly why the power users use Twitter, and it's probably a major factor behind its success, but I'm not sure if that's the way that most people use it. So I'm continuing to see like relatively aggressive moves lower, and then it magically pulls back up. So it's not really doing me any favors in terms of, do I want to get back in? I kind of feel like I saw the volume that I wanted to, and I'm not seeing more, which is still not really very indicative of this large meta order I was looking for. Although it could, I'm definitely seeing it in the 5-year and not the 10, so. Well, you can get a chronological feed on Facebook, for instance. I'm pretty sure that all of these platforms have an option somewhere where you can change to most recent posts first. It's not the default and nobody uses it. That's the irony, is that when Facebook changed that, everybody complained about it, and then they went and added the button back in and nobody uses it. So here's how I think people use Twitter. Okay, I think that the majority of people that use Twitter say, "Oh, I would like to talk about or learn about X thing," and maybe it is a current event happening, and then they go in and they click the search, or they go to the front page and they look at the trending hashtags, right? I don't think that there is actually that many people with TweetDeck open watching the most recent tweets. And by the way, if you go to the default Twitter homepage, you don't see it chronological. It shows you recommended tweets first, right? Like I said, the people that are using it as like a real-time communication device is the power users, right? And so a lot of people came to Twitter for the power users. That's why I'm saying it was very key in Twitter becoming successful, but it's not how the majority of people actually use it. So, if you're Threads, right, and you're trying to take that, yes, having the real-time stuff would be important, but it would only be important in as much as you could attract the power creators over to your platform, right? Like for us, if Threads was attractive enough that Nick Timros decides that he's gonna tweet there instead of Twitter, and then we would move over there to follow him, right? But I'm not so sure that that's the way this is going to go. I think that it's probably going to be more like regular people moving over right now, and probably, like a curated feed would probably be useful. But like it's supposed to launch today, so we should be able to go and try it ourselves and see how it's working, right? I guess the thing that I see, though, is I do have concerns. Well, but I don't think it was public yesterday. I do have concerns about Twitter, that like Twitter's not going to survive, and looking at like what the alternatives are. But what I think that we're going to get is just more in shitification, right? That what replaces it isn't going to be as good as Twitter was. I don't think that I could sign up for it, though. Right? It was up yesterday, but I don't think it was public yesterday. Let's see. What even would be threads.com? No, Threads is Slack replacement designed for makers. Okay, yeah, the Meta Facebook's blog post about it was posted 14 hours ago, so just before midnight. Threads. Threads.net. Yeah, I'll pull it over here. Threads.net. It's got a little thing here to get threads. Okay, so my first issue with it is no desktop application. Am I reading that right? Get threads. It wants me to scan it, which means that they want me to get the yeah. Yeah. How can I access it? Currently, you can access Threads only via the iOS or Android apps. There is no desktop version at this stage, and Meta could not say when it might make one available. Screw that. Screw that. Guess we're not doing that one. Not suitable, not a suitable replacement for the trading community. At least, right? Okay, now, so here's something else I'm seeing relevant to this. So here's Lunda Yacarino on Twitter. Everyone's voice matters. Whether you're here to watch history unfold, discover real-time information all over the world, share your opinions, or learn about others on Twitter, you can be real. You built the Twitter community, and that is irreplaceable. This is your public square. We're often imitated, but the Twitter community can never be duplicated. And that is being retweeted by Carl Quintilla. It'll never be because Meta legit sucks. Their apps are the same thing and their algo is crap. Right. Well, okay. So here's what my prediction, okay, is if Meta fails, then we will have arguments about whether it failed because it was Meta or because it was using the Mastodon protocol. Right? Everybody will argue about why they couldn't unseat Twitter if it actually goes down that. Like I said, I'm okay. So like, for instance, Google has been kicking Twitter off of their servers, and Twitter has like not been paying for some of their office space and things like that. Like, I'm really concerned that Twitter is actually having money problems and won't be able to continue on much further. Could be wrong, but that is a concern. Well, I'm a little surprised here that as we come back that the micro treasury yields are not coming back in yield as much far, because again, I got off at 4.5, right? So even if I was bailing now, I would be like in a really good position. So I really miscalculated that one. It is okay. I think there's a lot of randomness to that. I'm not going to beat myself up about it too much because it wasn't really like a huge move per se. It was kind of like it was a small move that ended up being a big move because of the liquidity. So I can't fault myself for not getting it exactly. And it didn't really kind of play out in the way that I like to see it, where it's like, you know, that big meta order comes in, you see the absorption in one spot, the whole forms. It didn't play that way. Integrate Facebook and Instagram, which they kind of already have, and stop trying to take the same darn platforms and make... Well, but they didn't... Dude, the way that they did Instagram was, I thought, the stupidest thing. Because, like, you could already post stuff on Instagram and then share it to Facebook, and it's just the same thing. When they bought it and integrated it. It was really like, buy a competitor so that we don't become irrelevant, but it didn't add anything to their platform at all. Hey, Gus. Weren't you already here? Shouldn't say morning, folks. You should say something else to signify that you came back. And then we can say, welcome back, Gus. Or X Live, what if the fear of a 5.5% federal funds rate turns out to be worse than the reality? I don't think so. Oh, you didn't realize you'd messaged before. See, every time I see Gus, I just see, oh yeah, I still got some work to do. It's like I got this problem where, like, okay, you come in and you have, like, yeah, I have to filter it to a certain, where is it? Process day. And process features right here. Okay. So I have to say, okay, only pull the entries that match trade aggressor buy, and trade aggressor sell. And then sometimes it'll come out empty. So I created an if statement to catch that, but it doesn't look like it worked, right? Error processing file, attempt to get argmax of an empty sequence. So how do I detect an empty sequence properly? So I gotta change that, and then hopefully then it will all work through perfectly. Because oh man, it was wigging me out yesterday. Like I ran the one over here and I ran the one over here, and I started comparing them. I'm like, they're not even close. No, this new one is screwed up. And then I realized that it was because there was another entry that was putting all of the volume down at 0. And, because I wasn't filtering. Kind of annoying. And it's not like it takes a long time to run too, right? So. Okay, now that we're at 12.5, they're kind of doing that same thing where it's like, okay, we're kind of slow here. You know what? That little move lower, I don't think that was the meta order we were looking for. I think that was a stop run. I think that was like somebody had bought it up, maybe like after the news, and it was coming back and they were starting to get concerned, and so they had to puke it all. Because we came right back to the 12.5 again. We are doing everything in Linux. PC was making things slower for us for some reason. Well, so this thing right here, like just saying, okay, I now have to filter all of the entries to only find the ones that are actually trades, right? That's a lot of processing. The algorithm is basically O of n, and all that does is just make the constant that's attached to that twice as much. Right? Basically, so Cn, right? C times n. C being a constant, which is how much it takes to run through it once. And basically, it like doubles or triples the amount of time that it takes to go through once. And it's only like a fraction of a second, but when you're going and you're doing 10 years, it matters. And so, yeah, I'm kind of a little frustrated at how they try and provide that extra data within the same set. They're forcing you to filter it out. I don't think that was very smart. That's not how I would have done it. I would have, things like daily volume and stuff, I would store those in a different place so that all of my other pipelines afterwards can parse through all of that information more quickly. Oh, you saw a 35% increase running on online. So you know, that probably has a lot to do with Python, right? So there's this whole thing with where Python isn't actually that performant, and then there's all of these different things you can kind of do to make it more performant, and especially when it comes to like using PyTorch and stuff like that. So there's a lot of things that you can do there. It's not yet. The thing has always been that like you can kind of compile Python, but it's just not completely there. I'm doing this one in Python largely because I want it to get done quickly. I would like to go back and use Rust. Although I was seeing this thing yesterday, like there was this person there saying what's in and out in computer science right now, and their first thing was Rust out. And their argument was there's too much drama on Rust. Well, I didn't know anything about that drama. I mean, I knew stuff that had been going, but the whole drama that happened in May, where there was like this developer that was going to a conference, was going to give the keynote, and they got downgraded, and they were arguing over whether it was a slight to them or not. And then somebody went and forked the project, and I didn't hear any of that. And I'm kind of sitting here like, well, I don't know if that's really a good reason to not use Rust anymore. It seems like it's still the best language out there, but I don't know. Or R. I don't know how R does with the performance bit, but anyways, I'm almost done, and then I'll have the stuff that I need to finish that video so that I can put it out on Monday. Oh man, by the way, that Bitcoin did push lower. They are now at 3320. Wondering if they can make it to 30K today. That might be a little too far. There's still not, I mean, so we bounced back up here again, but it's not back to 13.5. And like I was saying again, could probably have gotten to 60, so I probably could have gotten $25. So yeah, and it's because the 30-year came down a lot more than the others. Yeah. Oh well. You can't get it perfect every time. I would like my winners to be a lot larger than they are, but $10, well, okay. Sending you something in Discord. Okay. Oh no, I have the PDFs, yeah. Yeah. See, the issue is they should have had like a type, like, there's a type that says this is a trade, so that I can get all of the trades with one filter, right? Oh, that means it's time for me to get going, guys. Well, crazy day tomorrow is going to be super interesting, right? And all of next week too, frankly. So we'll see where we go. How high do you think interest rates can get? Because this is kind of saying to me that 4% is maybe not even close to how far this might go. So we'll see. See you guys tomorrow. Stay excellent, team.